Okay guys, so we're going to talk about the breaker block entry model. Most of you have been asking for that, so I just decided to make that for you since that's the last topic for our POE points of interest videos. Yeah, so let's just get straight to the screen so that we talk about that. So as you know, we've done the continuation entry model where you only need what? The break of structure, the other block that caused the break of structure. You find your structural liquidity, which is the first pullback that failed to touch your other block, and then original pullback happens. You take the trade to the downside. Simple entry model, other block continuation entry model, OBC. And then now we're moving to a breaker block. Most of you have been asking for this one. The breaker block entry model is the most asked of all. Most of you have been asking for this one, so let's just get straight to it. Let me show you guys how to find your breaker block entry model. So for the breaker block entry model, this is how it looks like. All you need is what? A failed order block. Do you understand? An order block that failed to hold price to the upside. You can see this was an order block. This was a buying order block, a bullish order block, break of structure, market structure shift, price tapped in. So it's supposed to hold price to the upside, but what happened? Price broke it. So once the order block gets violated, once the order block price breaks your order block, all you have to wait for is what? Your structural liquidity. Do you understand? You look for your structural liquidity, price taps in, you take your trade to the downside. That's basically it for the breaker block entry model. You find your failed order block, find your structural liquidity, price taps in, you take your trade to the downside. Do you get it? Very simple demonstration. So let's just get straight to the chart so that I can give you some practical examples so that you can just replicate this kind of thing on your chart. So guys, let's look at this particular angle over here. Okay, this particular angle over here, you can see there was an order block over here. Let me draw out the order block, then after that I'll tell you guys how I got that order block. There was another block over here that failed to hold price to the upside. So let me first explain why this is an order block. You can see that market was going down like this. This was lower low. First we have a lower high, lower low, lower high, lower low, lower high, lower low, and the market went up to break what? A lower high over here. Do you understand that? And I told you that if market breaks a lower low in a downtrend, we call it what? A break of structure. That's what we had over here. And then if market breaks a lower high in a downtrend, we call it what? A market structure shift. So we had a market structure shift over there. Do you understand? Price went bearish before going up. So our last bearish candle over there is going to be our what? Our order block to hold price to the upside. So price was supposed to tap into this particular zone like this and then go to the upside. But what happened? You can see the price violated the zone. Do you understand that? So now what we're going to do is we're going to look for what? Our structural liquidity first. You can see when price broke this zone, we had our first pullback over here. Do you understand that? That was our first pullback, but you can see it failed to touch the zone. It failed to touch our zone, so that pullback becomes what we call our structural liquidity. So let me mark that out. Mark this pullback out as a structural liquidity like this. You can see that. That's a structural liquidity like this. And then what happens? The original pullback takes place, and then our confirmation comes at this bearish engulfing candle over here. You can see that's a bearish engulfing candle. As I said to you guys, I don't trade without confirmations. Do you understand? I don't trade without confirmations. So you can see the confirmation was this bearish engulfing candle, but I would have, because price broke the order block a bit, I would have waited for like some more bearish momentum before I entered the market. So I would have probably entered at this second candle or this third candle over here. So let me mark out my entry for that. Yeah, let's take this third candle, and then my stop loss on top of the confirmation like this, looking at what? A 1:4 ratio reward. Simple. This is a simple trade, guys, and you can see 1:4 ratio reward, take profit smashed so easily. So this is the breaker block entry, guys. Let me delete this as well so that the entry looks clean. Let me delete this. Okay, yeah. So guys, this is basically it. This is the breaker block entry model playing out very well. We have a breaker block over here, structural liquidity or inducement over here, breaker block, the failed order block, first requirement, second requirement, structural liquidity or inducement, price tapped in, we got our confirmation, but it was a little bit above the order block, so we waited for some bearish momentum, took the trade to the downside, and price smashes a full take profit. So guys, that's basically how you catch your breaker block entry models. For those of you who want to learn how to trade like me, you can enroll for the mentorship. Just send a DM and then we'll process that for you For those of you who want to join my VIP signal groups to enjoy my premium signals as well, you can equally send a DM to me so that we process that for you as well. For those who want to join my Telegram channel, my Telegram community, so I don't miss out on any Forex updates or any of my free signals, you can go ahead and also click the link in my bio. If that link isn't working, you can just straightforward send a DM to me. I'll send you the link personally. You copy and paste it in your browser. You have access to the channel, guys. As usual, comment what you want to learn about Forex in the comment section of this video. If you're lucky, I'm going to make a video on that for you. Yeah, so see you guys in the next one.